John Meuret from Meuret Grain Company is our corn and soybean market analyst this week. The U.S. harvest is nearing the end. The U.S. Department of Agriculture's latest progress report shows farmers have picked 93% of this season's corn and 97% of this year's soybeans. As the agency's November crop report showed, production in 2016 will push the country's total corn supply to a new record at more than 17 billion bushels. The ending stock's estimate of 2.4 billion bushels is the most since the late 80s. There has been solid demand from the export market. Final numbers from September show corn shipments were 89% higher than the previous year, and the current export forecast for 16-17 would be the highest since 07-08. We talked with John Wednesday afternoon near Monroe, Nebraska, about the export market, the beginning of the South American growing season, and harvest results from his area of northeast Nebraska.
Real good, Jeff. This is probably one of the first years we've consistently seen better corn. So you used to hear the 240s, 250s, and it was one a year, two a year. Now you can find a dozen of those. So overall, really, really good.
And beans?
Beans were good as well. It was the biggest bean crop we've never felt, Jeff. It stayed wet enough in the outside weather that you never really took the bean crop off quickly. So over a 30-day period, though, the yields were excellent, and they stayed good.
Let's take a final look at those numbers from the USDA last week. When they're finalized in January, do you expect any major changes?
I really don't. They took the corn yield up, which surprised everybody, but the late corn was better, and I think the late corn was better everywhere. So seeing that and then seeing what the USDA came out with, I don't have any problem with the 175. Probably not a lot of revision from that, plus or minus a half bushel or a bushel, Jeff, but not a huge item. And beans, I don't argue with that either. That is a record yield. When we talked about 50 bushel, we didn't think it was possible. So to finally come with something like that is surprising, but again, I can't disagree with it. So,
can you describe just how strong the export market has been for both American corn and beans?
The beans, first and foremost, have been fabulous. It's been fast, but the pipeline was empty. We've built capacity in the last 10 years to get beans exported. So both the Gulf and the Pacific Northwest have been very aggressive getting boats loaded and shipped. And we're starting to feel a little bit of a slowdown there, which is normal, but things have flowed really, really well, Jeff. So yes, it's big, but I think our window is also shortened. So instead of exporting beans till February or March, we might slow the process down come January and early February. So, and corn's going to pick up some of the slack there, and it needs to. If we export 2 billion bushel of beans and 2 billion bushel of corns, we need to get moving on it.
So who else is in the game? Is it South America mainly?
South America is in there, and so they planted their bean crop a little earlier, which means they're going to sell their bean crop and harvest a little earlier. So if they have normal weather and normal harvest, they will be back in the market in late January, which is a month earlier than normal.
Is the strengthening dollar a concern?
I think short term, yes. Long term, no. Short term, it can have a little bit of an impact. China can now sit back a little bit and buy beans a little slower. They've got a little more inventory floating that they're comfortable. Soybeans are in a carry for the first time in a long time, so they can be somewhat patient when they do that.
We've talked about this before, but how much flexibility does China have when it comes to buying beans?
I think they've got a lot of flexibility, but they've also got to buy a lot of soybeans. So when they can take a month off from buying, when they come back in on day 32, they need to buy a lot more. So you can somewhat anticipate it, but it's large and it's consistent. So
you mentioned South America. Give me an update on what the beginning of that growing season looks like.
I would say excellent so far. There's a couple dry pockets in northern Brazil they're worried about, but there is some rain patterns this week through early next week that look like it's going to soak them up pretty good. So above average today. I think they planted a little earlier than they should have, and so they're on a really good start, and they need one. They missed last year, and so did Argentina.
Expectations of a big crop?
I don't expect why it'd be anything but a big crop today, Jeff. I think if they get it in the ground and if the weather cooperates, they should be able to harvest and haul a big crop to town. So,
how has basis moved here as harvest closes out in the area?
We see corn basis starting to perk up late here in the last week. We see corn basis up a nickel to a dime in some cases. Soybean bases are up maybe 20 cents in the last 10 days. So you can feel that it's the end of the crop and we're starting to firm things up. And that's very normal. But Jeff, it started weaker than normal, so it should snap back a little faster than normal.
What was the mentality of the grower here closing out what's going to be a record crop in both corn and soybeans? Are they aggressive to sell? Were they aggressive to sell?
Well, I think he was aggressive early on soybeans. He was surprised they hung around $9 cash, and then he got quiet. And I think he got quiet for a couple reasons. He was surprised that the prices stayed as high, and they thought maybe he's the only guy getting the big yields. And then the second one is he's been able to do field work. We're standing outside in November without a jacket on, and And so I think until the farmer gets pushed into his desk, he's not particularly engaged in marketing, and nothing's scaring him today. We're 75 cents higher than a year ago on beans, and a bigger crop and a bigger carryout expected. So, and corn's a head scratcher as well, Jeff.
Finally, to close out with your price forecast, let's start in corn.
I think corn's going to work 30, 40 cents lower than here in the next 60 days.
That's pretty depressing.
Thanks, Jeff. Well, no, we tried to rally in October. We did rally in October. We set the fall insurance price, and then I just think we're going to fall back to the lows here. Unless we have a problem overseas, we're going to fall back to the lows.
You anticipate then that the farmer's just going to sit and wait until the first of the year?
I think he'll wait as long as he can. I suspicion he needs a little more cash before year end. But yeah, he's going to sit and wait as long as he could or can, and then we'll see where it goes.
All right, second half of the game, pick me up in soybeans.
Soybeans short term, I'm negative. Long term, I'm friendly, Jeff. So we'll make you feel a little better, but we should see the pressure of no problems in South America, an overwhelming cash supply in the U.S., and I think until something changes, we'll be under some pressure.
Why long-term positive then?
Well, China's demand, we talked about it earlier, but they've got an overwhelming demand. If they take 85 or 90 million metric tons, that is a massive amount of soybeans. And so until that slows or we do something to mess with foreign policy, it's going to stay in there strong. We'll chew up every bean we grow.